Good morning, everybody. Welcome into another live stream here with the Everyday Growth Advisors. Hope you are having a good morning and have had a great weekend. I hope you can hear me. Can you guys hear me? I hope you can hear me. We have a big week ahead right now. CPI, earnings season, a new earnings season, and also more escalations in Russia and Ukraine with nuclear threats running really high and wild. But first, of course, let's discuss the elephant in the room, which is the macro conditions. Financial conditions are still tightening, and last week's job reports does not help the case at all. We are in a very bizarre phase of the market where good news is bad news and bad news is good news. As I had mentioned in Friday's live stream, the jobs report that we got in the morning was not very good news because it was a mixed sentiment. The unemployment rate came down even though the non-farm payrolls were worse. So that means that the labor market and labor participation is still pretty strong, which puts the possibility of a rate hike easing, or rather the Fed not doing a rate hike, on the back burner. When labor conditions are strong, that means the economy is fine, it's doing well. The Fed has no reason to back off from its war path of increasing interest rates, and that puts on more pain on equities and valuations of equities through the bond market. Today is, of course, a bond market holiday. So we might expect a little bit less volatility in the bond markets because they won't be trading, obviously. But this week we get more key data in terms of economic sentiment, which is the CPI number. On Wednesday we get PPI, which is the producers the producers index. And then on Thursday, we'll get the CPI, which is going to be inflation related. So both sides, producer and consumer. Then followed by, and we also have FOMC meeting minutes that are going to be released on Wednesday, I believe. So that's also news that we will be waiting for. The market's likely to throw a little bit of a lull, I think, until we get those numbers. But you know what? Never say never. We don't know what's happening. Any kind of a event worldwide can shake the markets up right now. So in terms of what's going to affect the market in terms of economic numbers, that's only going to happen until Wednesday or Thursday. But till Wednesday and Thursday, we have escalations happening in Ukraine and Russia, and I feel like that might be something that could send jitters down the market. As of right now, futures look like they are attempting to rally out, but of course we can't say that they are. This could easily be a fake out, very low volume buying. If anything, we get up to around 36.85 and then start rejecting downward again. So we'll be watching that level very, very carefully this AM. We could also possibly come back and retest 37.30, like this area right here, to form kind of a weird head shoulders pattern kind of thing. Maybe like this, right? There's a possibility for that to happen as well. Never say never. We'll play it pivot by pivot. So the three pivots that you need to know for right now are 36.35, 36.85, 36.30, 37.30, sorry. So if we clear above 36.85 and we hold above it, then 37.30 opens up. If we reject 36.85, then we come down to 36.35 once again, retest, and then start to hit for that low in the beginning of October, where we had actually failed to break below. So that's kind of where we're at with the technicals on SPX. With NASDAQ, it's a similar situation, but we're sitting on a key pivot point here. Break below it will send us down, pretty far. So we'll see where we get down. But, it wouldn't be impossible to rule out the COVID highs of 2021, like this level right here, at around 9,000 or 10,000 for NASDAQ if we really do break below. So we're not out of the woods in terms of price reversal. Please don't take this little rally here to be the gospel truth, nothing but the truth and everything but the truth. You play the price action based on what you see. We could easily get rejected and send another wave down on this rally. This is actually a great opportunity. If you are wanting to take short positions, you're getting an entry here into your shorts at a cheaper price. So for those of you that have been waiting for an entry, this is your entry right now. It could probably get up to about 36.85. If you get that 36.85, then that's your entry for your short position after you can confirm with the rejection. There are some obviously key sectors that we're looking at. Energy is still a bright spot here. We're looking for that break above $85 to go long on XLE up to 92. I will only take the upside if we break above 85 and hold above 85. Similar concept with the XOM, which is going to need to break above the all-time high at 105. Wait, is it all-time high? Yeah, it is. Almost, yeah. 105 is all-time high, yes. So we'll be looking for XOM to break above 105 to get that upside as well. They have earnings coming up 27 October, which is in about 2 weeks. So that will be something that we'll be watching. Some stocks that I'm looking at for short opportunities are Enphase Energy and First Solar. They're looking really great if they can break down and start rejecting. I'll be looking to take some downside positions if we get rejections and continued downside. These are two opportunities that I posted on Discord just this morning. Apart from that, I did mention Tesla would get to 220. It did get to 220 and then bounced this morning. So right now we have kind of completed that wave, and we could see a potential bounce on Tesla in the coming days if it doesn't go down to 210, which is the lows of June, May to June, right? You can see this lows here. So we'll be watching for Tesla to find demand. If not, it's going to continue to slide down here. And I have been talking about Tesla for about 2 weeks now and telling you guys to watch this ticker because when it starts selling like that, it's very aggressive in terms of selling. So yeah, that's pretty much all that I have for you guys. Apart from that, there's obviously semiconductors are blaringly selling off here. Like AMD and your NVDA, if they break below these key levels, then they're going to slide all the way down. Like AMD's next pit stop is going to be around $52. With NVIDIA, the next pit stop is, there is a support at 116, and then below that is going to be a far drop. So it really kind of depends on where this can possibly go. Microsoft, another one that I've been looking at. We got that relief rally back up here, and then now we're looking for a potential slide here down into the 230s. So 230s, and then after that, next pit stop is 225 roughly. So 230 and then 225 is what I'll be looking at with Microsoft for the downside slide. And if Microsoft gets taken out, which I think it might, then Apple's going to slide along with it. And with Apple, we have a lot of downside still, which means, if we break below the 130.38 level here, which is around here, then we are likely to see Apple slide all the way down to 133. And that's going to take the whole S&P 500 and NASDAQ down with it. So watch these two to get the cadence of the market. These will be important. In terms of, so that's your technicals and pretty much tickers. Let's talk about earnings season as well. This earnings season is very similar to last earnings season. Last earnings season, a lot of the market was pricing in the negativity of, the market not performing well, etc., etc. This is when that, season started, and then we came all the way down here. And then right after that, we started moving sideways, and then the sentiment started improving. And people started thinking, oh man, you know what? Companies didn't do that bad because the expectation was so on the floor that, market participants were having very, very little expectations of the market. We're having a similar kind of a move here now where we keep on free falling on the indexes. And if we have any kinds of big tech that outperform the market, or any kinds of growth tech that outperform the market, then we're likely to see a rally back in the market during earnings season, which is still the end of the month before we get any interesting reports. Inflationary pressures are obviously going to be squashing margins of profit and also reducing revenues. Hopefully not too much on the consumer side. So we'll see which companies really survive this, because only the toughest ones will survive this environment. The market's now pricing in is almost a 90% chance of a 75 basis point rate hike in the next Fed meeting. So CPI numbers that come out this week will either likely confirm or will negate that expectation later this week on Wednesday and Thursday. Now, obviously, let's talk about CPI, which is also another elephant in the room. So CPI numbers, which will come out this week, will be very telling on the next Fed pivot. The market doesn't care much about anything else except for, is the Fed going to ease its policy and start acting a little more dovish instead of being a super hawk as it has been. So a hotter CPI number this week is going to confirm the suspicion that inflation is still high and that the Fed has to continue to hike. And a softer CPI number that means, obviously less than a consensus, then is going to pretty much put on the table that CPI, that inflation is improving, and then that gives the signal to the Fed that possibly they can start to ease. Now, the possibility of a softer CPI number is very slim, mainly because you got to look at the price of some of the core things in the market, which are oil and some commodities. These are all important things to have a look at. Obviously, with oil prices still relatively high, it's going to be tough to put a finger on exact CPI numbers, but remember that it's going to add literally fuel to the fire if oil prices are higher. Now, so that's your CPI. A hotter CPI number means more pain. Softer CPI number means possibility of pause of rate hike. That's all you got to know for this week, Wednesday, Thursday. PPI number, once it comes out, you will kind of be able to guess CPI number. That's usually the case. And then obviously the last thing that I wanted to talk about was, which honestly I'm leaving it to the last because I'm not trying to fearmonger, but there have been a lot of talks about nuclear technology being used during the war in Ukraine and Russia right now. It's kind of bleak. The discussions that they're having, and then even with Putin discussing things like that, and even the president of the United States, Biden, coming out to say that the last time nuclear weapons were used was during the Cuban Missile Crisis and Like, you don't usually hear a president come out and saying these things. It's kind of weird. But you know, I just hope that the escalation doesn't get that bad, because it's not about them using nukes. It's more about the perception of them using nukes that might send jitters in the market. That's what I'm thinking about. The market always doesn't always act on just what happens, but also the possibility of something happening. So you have to be extremely careful, you know, with this sensitive, you know, situation that's happening, and that's one of the reasons why I'm treading really carefully. It is a really smart thing to purchase puts or hedges for your portfolio, even if it's going to cost you money. If you have long-term portfolio and you have a lot of money in it, let's say, like for example, my long-term portfolio is well over $1 million. You definitely have to purchase some hedges for that. So, I mean, obviously, I already do have some hedges. It's just buying insurance for your car is never a bad idea. That's all I'm going to say. So do it purposefully, and you know, you can obviously pick a time frame for the escalation. Maybe you pick that till the end of October, and that might be enough. And then, you know, you review the violence in the end of October, and you decide if you want to purchase insurance again for the first 2 weeks of November, and you do it like that. That's going to cost you less in premium in terms of put contracts. So that's all I have for you guys today. I appreciate you guys once again tuning in and coming here. Once again, hit the subscribe button and the like if you are here. Truly appreciate you guys taking the time out to be here, and I will see you guys on Wednesday. I will wait 1 to 2 minutes to see if you guys have any questions, or if you want me to break down any charts here for you. So go ahead, post them in the comments section, or you know, leave your comments below, and I'll get to them right now. I'll wait a couple minutes. Let's see. So Putin, Crimea bridge blast is an act of terrorism. Ukraine special services behind bridge attack. Oh no. Oh wow. Why is GM down 27%? What the hell? What the hell happened to this thing? Ouch. GM is down 27% after some cuts in its price targets. Russia should retaliate after Crimea blast. Ouch. All right, I see no questions. Therefore, I will see you guys on Wednesday for the next live stream. Appreciate you guys tuning in, and peace out. Have a good trading day. Good luck. Bye bye.